Swayam Prabha. Digital India. Educated India.
In the last session, we worked on solving Maynard Company A, wherein we prepared the two balance sheets, the opening and the closing, that is the 1st of June balance sheet as well as the 30th of June balance sheet. And we did explain about what do you call it as the different classifications in the asset, the current asset, the non-current asset, the different classifications in the liabilities, the current liability, the non-current liability, and so on and so forth. And then what we said, based on this, we will solve Maynard Company B, which is to do with what do you call it as the income and expenditure statement. That is where we stopped in the last class, if I am not wrong. So we will continue to solve that basic part of it as of now, because in the sense that we will continue to work on what do you call it as the Maynard Company B. Maynard Company B, as you would see in the case itself out here, I can show you the case out here. It is nothing but Dan Maynard was grateful for the balance sheet that her friend had prepared. In going over the numbers, she remarked, it's sort of surprising that the cash increased by 31,677. We'll see that. The cash, if you actually see this in this particular case, the current assets, the cash increased by 31,000, whatever it is. We can verify it. This minus this is basically what is called as 31,677. That is what the cash has increased, and that is what she says. But the net income was only 19,635. That also we will verify that. 19,635. If you look at this out here, the retained earnings increased marginally. That is before dividend. There is $11,700 dividend paid, that is before dividend. We can actually see that the net income increased only by this much. This one 7,935 plus 11,700, that is the dividend, plus what do you call it as 11,700, that is the dividend. Plus the dividend out there, that is 19,635. So, and that is what the exact amount what they have taken. So, the cash has increased, but the profit has not increased. Profit and the increase in cash is 31,677, whereas the profit is only 19,635. So, she is a little amused. That is what he said. Her friend replied, a partial answer to that question is to look at an income statement for June. I think I can find the data and prepare it for you. Let us prepare an income statement and see where is it, what is that. What is, for example, the profit will be so much, the cash could be higher. Why? Are there any accrued income, accrued expenditures, where the accrued expenditures where the cash has not gone out? Or is there any advance of income received? Because of that, what do you call it as your cash balance is high, whereas your profit is not high. There are accrued expenditure which you have not paid, but so the cash is high. It can be any reason. We will sort of see that how it happens out here. In addition to the data given in case A, her friend found a record of cash receipts and disbursements which is summarized in Exhibit 1. She also learned that all accounts payable were to vendors for purchase of merchandise inventory, and the cost of sale was 39,345 in June, where it is. Then there is what is called as exhibits given out there, cash sales, credit customers, and so on, and all the disbursements out there, and some bit of reconciliation what she has basically given out there. Let us not even worry about the reconciliation at this stage. Let us worry only about this particular part out here, what I have highlighted. Let us prepare what is called as an income and expenditure statement out. I go back to this. I am going to write where I am going to prepare an income and expenditure statement. Let us first look at what is called as the sale out there. That is, I would say what is called as the cash sale. Cash sale, why do you say cash sale? If you look at this, there is a cash sale, that is what you call it as 44,420. That means you have received that money and that is a sale that is taken place, 44,420. That is a sale that has taken place out there and you have received that money. So, it is a revenue out there, it is a revenue or receipt or whatever you might want to call it, etc. out there. It is a revenue or receipt out there. Now, I am going to move beyond. In this particular case, I am just going to add two more, what do you call it as, two more rows out here. Let me add two more rows out here and let me go back. Cash sale, so much. Now, what is the credit sale? Is there any credit sale out there? Credit customers, you have received so much, 21,798. But I want to know what is the amount of credit sale that has happened during the month of June out there. Is this, you have received this money from credit customer, this is a cash inflow, cash receipt. But what is the actual credit sale? What is the sale that has accrued during the period 1st June to 30th June? That is all I would say for the month of June. Now, let us go back, let me go out here to the working in this particular case. Now, I will say, what are the accounts receivable as on June 1st? I just go to the balance sheet. And then I will say accounts receivable as of 1st of June is 21,798. So, let me say the accounts receivable as of 20 is 21,798. What is the money that is received from credit customers? This is the money 21,798 is received from customers. Amount received. Amount received from credit customers. What is the amount received from credit customers? The amount received from credit customers is 21,798. So, what is the amount still due? The amount still due from last month receivable. From the last month receivable, the amount still due from the last month receivable for me is blob. That is, this is what I had to receive. I have received so much, so it is blob out. That is all. Just going to move it down. Now, I go back to the balance sheet out there. As of 30th of June, there is this account receivable 26,505, that is new accounts receivable that is basically cropped up out there. How it is account receivable crop up? Only when you make a sale, you will have to receive. So, what has happened? New account receivable as on June 30 is what is called as 26,505. So, what is the credit sale for the month of June is what? For the month of June is whatever is the receivable as of 30th of June minus whatever is the old receivable out there, whatever is the receivable as of 30th of June minus whatever is the old receivable there. In this case, the old receivable is blob 0. So, what is the total credit sale for the month of June? It is the same 26,605. This is the receivable as of 30th of June. This includes whatever is receivable on the 1st of June, if at all anything is pending. In this case, it is 0. So, what is the credit sale for the month of June? This minus the amount still due from the old receivable. That is all. So, my credit sale in this particular case is nothing but I will just pull this figure out there. That's all. So what happens? What is my total revenue in this particular case out there? What is my total revenue? What is my total revenue? My total revenue is this plus this. This is what is my total revenue in this particular case out here. So far so okay? So far okay? So what have we done? We have taken care of the credits cash sale and then the credit customers. Cash customers and the credit customers, both we have taken care of it. Now let us look at then what are the other cash receipts. Dan Maynard paid 11,700 and bank loan was 20,865. Bank loan is a cash inflow. Loan, that is okay. Loan is not a revenue. When Dan Maynard, why does Dan Maynard pay 11,700? Go to the balance sheet out there, the closing balance sheet. It says notes from Dan Maynard 11,700. That is, you have to receive from Dan Maynard as of 1st of June 11,700. She has paid back. So neither is that a revenue. So the other two cash aspects that are mentioned here are not revenue. Okay, we have taken what is the revenue. Now let us go comfortably to the expenses out there. Now let me comfortably move to the expenses in this particular case out there. Let me comfortably move to the expenses out there. Let me comfortably move to the expenses out there. Now under expenses, first thing, first and foremost, cost of sale. Under expenses, cost of sale out there. Under expenses, the first and foremost what we need to look at is cost of sale. What is that cost of sale? Let's go back to this P&L out here. Equipment purchase, cash outflow. What is equipment purchase? Equipment purchase is a capital expenditure. Money has gone out to purchase an asset, so we are not even worried about taking it in the P&L, so I will not worry about it. It says other assets purchased. I will neither worry about this because it's a, you are purchasing an asset, then what happens? Only your balance sheet is going to get impacted. So depreciation part of it, worry about depreciation. We will worry about depreciation later. As of now, let us not worry. We will worry about depreciation later. Right? So that is all what will affect it. Now it says the next one. The next two are important. Accounts payable for merchandise, cash purchase of merchandise. Accounts payable for merchandise, cash payable for merchandise out there. So let us look at that. In fact, in this particular case out there. So I need to know what is the cost of sale that has basically happened. So to know the cost of sale, let us look at out here. I've done this out here. Merchandise purchased on cash. What is the level of merchandise purchased in for cash? 14,715. Now I need to know what is the merchandise that is purchased on credit out there. Now you will say, sir, there is a payment of account receivable 8517. Is that credit purchase? No. I will go back here. Again, similar, exactly same thing like this, we will do that out here. Exactly same thing like that, we will do that out here in this particular case out there. 1 second, I am just adjusting my, creating some space, yeah. What is the accounts payable as of 1st June 1, as of June 1st? If I look at my accounts payable as of June 1st out there, I am going to get to my current liabilities out here. Accounts payable as of June 1st is 8517 out there. That is the amount of money that I have to pay, 8517. What is the amount paid on accounts payable in the month of June? In the month of June out there, the amount paid in the month of June on accounts payable, if you look at, you see here, it says 8517. So what is 8517? What is still due? Still due from the old, what is the amount due? Still due, amount still due from old receivable, payable, sorry. That is, this is what I had to pay. I have paid so much, so the amount still due is 0. Blah out there. Now I have what is called as, I will go to the end of the month, and end of the month I see there is a payable of 21,350. I still have to pay 21,215. Why do you have to pay 21,315? You have to pay still 21,315 because you have made a purchase to that extent. So accounts payable as on June 30th is June 30th is what is the amount? It is basically 21,315 out there. So what is the credit purchase as of June, month of June? It is nothing but what is payable in the month of June minus what is the old payable out there. Similar, what is the old payable is blob out there. So the credit purchase as of month of June is 21,315 out there. So what is the merchandise purchase on credit? Merchandise purchase on credit is this amount out there, that is very clearly given out. So you have made cash purchase, you have made credit purchase. Now, what is it that we will take in the P&L or income statement? Only the amount of inventory that is utilized during the period. The amount of inventory that is unutilized will sit on the asset side as a inventory out there. You can actually see in this particular case, if you look at, there is a merchandise inventory. Unutilized will sit here. So, what is utilized only will come in the P&L or income statement out there. So, what we will do? When you began the month of June, you had so much of inventory already lying with you in the godown. 29,835 worth of inventory, you already had it lying in the godown out there. So, what is the total inventory that is available to you during the month? The total inventory that is available to you during the month is what you have made a cash purchase, what you have made purchase during credit, plus what was there in the opening stock. That is, when you began the month of June, 1st of June, what was there in the opening stock. All that is the inventory that is available to you for the month of June. Am I with you on this? That is the inventory that is available to you for the month of June. What you have purchased on cash, what you have purchased on credit, plus what was there in the opening stock in your godown. All the three put together is what was available to you when you began the month of June out there. Now, question is, what will go into P&L? How much you have utilized? How do I know how much you have utilized? What is available for the entire month minus what is still remaining is obviously what is utilized. What is still remaining? Yeah, I see, remaining at the end of the month is 26,520. That is what is utilized for the month. That is what is available minus what is left over at the end of the month is what is utilized during the month of June. Minus is what is utilized during the month of June. So, my cost of sale is, this is the amount of cost of sale what I will basically have out there. That is, I will say all these three put together gives you what is available for the month. Cash purchase, yes. Credit purchase, yes. Inventory at the beginning of the month, yes. All these three pooled together is what is the inventory that is available to you. Now, what are we worried? P&L, income statement, how much utilized? How do I know how much utilized? What is available minus what is still left over is what is utilized. That is what we calculate. Now, I know cost of sale. Now, from the cost of sale, what happens? This is the total revenue minus the cost of sale is what we call it as the gross profit. Minus the is what we call it as the gross profit in this particular case out there. Gross profit, that's the gross profit. That is revenue minus the cost of sale is what we call it as gross profit out there. Now, moving further in this particular case, let us look at the other expenditures out there. Cash purchase over, payment account receivable over, then I will say cash purchase of supplies 1617. What is this? Cash purchase of supplies 1617. Now, you might have purchased the supplies, but what am I worried? How much is utilized? There is something at the beginning of the month, there is something at the end of the month. We are worried about how much is utilized. That is what will go in the P&L, accrued out there. So, let us calculate how much is utilized. We see this as of now, wages, let us keep it, supplies. How much is what is the cash that is paid to supplies out there? 1617. What is the supplies at the beginning of the month? I will go to the opening balance sheet and I will say what is the supplies at the beginning of the month out there. Supplies at the beginning of the month is very clearly given out there, 5559, yes. What is the total supplies available? Total supplies available, this is the amount of total supplies, that is what is purchased plus what is there at the beginning of the month. How much is utilized? Minus what is left over at the end of the month out there, minus leftover at the end of the month out there. This is the amount of money that is left over at the end of the month. So, how much is utilized? What is available minus what is there at the end of the month is what you have utilized. What you have utilized out there, what you have utilized. So, I go back here and then I will say that is what do you call it as supplies utilized. What is the amount of supplies utilized? I will go back and then I have already done that calculation here. I will just do this and that is the amount of supplies that I have utilized. After that is dividends, cash outflow. Dividend is from the profit. So, I do not even touch that dividend as of now. I do not even touch that dividend as of now. Dividend is what do you call it as post. Dividend is what do you call it as post profit out there. So, we do not even look at that now in this particular case out there. I move further slightly in this particular case. I said wages paid 5660. Wages paid 5660. Beautiful. That is the wages that is paid 5660. Now, is there anything that is accrued? What have we worried? We are not worried about what is paid. We are worried about what is accrued during the period. Because if I go back to my liabilities, I still see accrued wages. There is accrued wages at the beginning of the month, there is accrued wages at the end of the month, there is wages paid in cash. What are we worried? What is accrued for the period of June? So, what is accrued for the period of June? Very simple, we will find out in this case. Wages pertaining to month out there, what is accrued wages due, what is the total wages. Let me reword this whole thing out. Let me say wages payable at the beginning of the month. Wages payable at the beginning of the month. What are the wages payable at the beginning of the month out there? Accrued wages 1974. What are the wages paid in cash? Cash during the month. What are the wages paid for in cash during the month out there? 5660. Out of the money 5660, what you have paid, 1974 pertains to the wages that is there at the beginning of the month out there. The wages that is there at the beginning of the month out there. 1974 pertains to wages that is there for the beginning of the month. This is the total paid. Out of this paid, this is what is the old one. So, I reduce that. So, wages paid pertaining to the month of June is so much. Pertaining to the month of June is so much. Is that all? No. there is something called accrued wages at the end of the month 2202 out there. There is accrued wages at 2202. Wages for the month of June. How much is it? Accrued wages for the month of June. How much is it? 2202 in this particular case. So, what is the total wages accrued for the month of June? Is this. This is, I can reword it. I said wages still due at the end of the month. So, what happens? 5,660 is what I paid. Out of the 5,660, 1974 pertains to the old wages. So, how much pertains to the month of June? 5,660 minus 1974, that is 3686 pertains to the month of June. I still have, at the end of the month, I still have to pay 2202. So, what is the total wages that are accrued for the month of June? What is paid pertaining to the month of June plus what is still due, that is what it is. That is what it is out there. So, how much is the wages that are accrued for the month of June? Wages for the month of June is basically, I have just done the calculation out here. I will just do this. Next, I go on. Again, I repeat, sir. Nothing. It's a what is the wages at the beginning of the month due old for the month of May or whatever April 1974. How much cash has gone out? 5660. Out of 5660, obviously 1974 pertains to the old one. So, how much pertains to the month of June? 3686. There is still some amount that is yet to be paid on 30th of June. How much? So, what is the total wages accrued for the month of June? What is paid for pertaining to the month of June plus what is still due at the end of June, both put together. That is all, and that is what we have taken out here. Next, there is, if I look at my sheet out here, it says something called utilities paid 900. There is nothing I see. There is nothing I see in terms of accrued or pending out there. So, I have paid utilities 19,700 out there. 900. Next, any other cash payment? Well, no, everything is done. Miscellaneous payment, there is something called miscellaneous payment to the extent of about 135 rupees. I will say miscellaneous payments, 135 rupees. Now, is there still something left out? Let us look at it. Let us go back to the balance sheet. Accounts receivable taken care of, cash asset, inventory taken care of, notes from Maynard, that is divided. What is she? Repaying the loan, not part of P&L. Now, there is something called prepaid insurance. At the beginning of the month was 3150. At the end of the month is 2826. That means what has happened? It has reduced. Why has it reduced? Because you utilized it for the month of June. Because you utilized it. Otherwise, why will it reduce? Why will it reduce? No, sir, they might have given back cash. If they have given back cash, it will be there in the cash receipt out here, like your bank loan. So, it is not there. So, that means what has happened? That is, insurance at the premium at the beginning of the month was 3150. For the month of June, whatever you utilize, still is 2826 is prepaid. That means, if I go back to my P&L out here, I will say insurance. What is the insurance pertaining to the month of June out there? Pertaining to the month of June, 3150 minus this, basically what do you call it as in this particular case, 2826. The difference between the two pertains to the month of June out there, and that is what we have taken. What is one more aspect out there? Well, let us go back to the asset. Let us go back here. So, insurance done, supplies on hand done, then there is something called building and equipment out here, and there is depreciation. Accumulated depreciation on the building 1st of June was 156,000. On the 30th of June, 157,950. Why the difference? That $1,900 and $1,950 or rupees, why has the accumulated depreciation increased? It has increased purely, that is because the depreciation pertaining to the month of June is added on the 30th of June. It has increased from 156 to 157,950 because the depreciation for the month of June pertaining to the month of June has been added to it. So, let us look at what is the depreciation in this case out there. Sorry. What is the depreciation on building? Depreciation on building out there. If you look at for the month of June, depreciation in the month of building is 57,950 minus 156,000. Next, depreciation on equipment, the same thing out there. Equipment, what is it? Depreciation in equipment was 5928. End of the month, beginning of the month was 5304. So, depreciation on building out there. I'm just going to move it by one more notch. So, what is the total revenue? Like that, similar to total revenue, what is total expenses? Accrued for June. Accrued for June, it is nothing but a simple addition of all these out there. That is the total expenditure that is accrued for the month of June out there. I am going to keep the same red color. What is the profit before tax? Gross profit minus my accrued expenses for the month of June is your profit before taxes out there. Total expenses. Let me check if all the figures are right. I just see that I think I made a small mistake when I entered the supplies out there. Instead of 161, it is not 1617, 1671. I'm sorry. It is not 1617, it is 1671 out there. So, that is 600 out there, and this is what basically happens out here. Now, this is the profit after tax. Now, what is the profit after tax? Gross profit minus your expenditure is profit after tax out there. Is profit after tax out there. Now, I will say income tax. There is a tax on the profit. Now, similarly, let us go back out there. Is there anything paid in terms of taxes out there? There is nothing paid in terms of taxes out there. Let's go back to the balance sheet out here, and let's go to the balance sheet. Let's go to the liabilities part of it. Taxes payable last year was 5,000. Beginning of the month was 5,700. End of the month is 7,224. Why is the tax increased? Because it has increased because there is a tax payable for the month of June. The due for the month of June is added to it. So, how much of it pertains to the month of June out there? How much of it pertains to the month of June out there? Let us sort of do this. Income tax for the month of June. Let me even write that. For the month of June. For the month of June. Income tax for the month of June. How much is it? It's basically whatever is due at the end of the month out here, minus what was due at the beginning of the month is the tax that is basically pertaining to the month of June out there. That is all what we basically see in this particular case out here. I'll just retype it. Income tax for the month of June 1524. So, what is the net income after taxes? 19,600. 635, and that's exactly what she said out here in this case. That's exactly what she said out here in this case. If you look at Maynard Company A out here, Maynard Company A talks about there is basically, that is what it says, and it says Maynard paid herself 11,700 in the form of dividend which used to repay the loan. So what happens? There is a dividend from the profit. What is the dividend from the profit? 11,700 which she used to pay. So what is the increase in retained earning? 7,935, and that's exactly what we saw out here, increase in retained earnings. That is exactly what we saw out here, and that's exactly the amount that we have arrived at out here. Am I okay? I think spend some time on this, you will understand this better. I think we have solved the income statement as well as the balance sheet. So that completes our income statement and balance sheet part of it. Now we move to the next stage out there. Thank you.